The question of how to estimate revenue and expenses for, let's say, your business plan, your pro forma, is really answered within the Boomerang book in two ways. So I encourage you to review it, but it is divided into new startups and existing businesses. If you're an existing practice and you've come onto the Boomerang software and the Boomerang way and the Boomerang book, you've got, let's say, 3 to 5 years of historical financials. You've got your income and your expenses. And you look at your expenses and you can create ratios as a function of income, as a function of a product. The cost of goods and service for a Botox, the cost of goods and service for filler, the cost of goods and services for a Morpheus treatment. And so if you're planning your next year's budget that the software is going to track and keep you focused on the revenue needs to hit those targets, you're going to be able to look at your historical financials and say, if I'm going to grow my top line by 20%, I'm going to look at what my revenue drivers, the 7 or 8 things I did that are going to contribute to that 20%. I'm going to look at each one individually. They're going to grow by 20%. And any cost of goods and services associated with those revenue streams are also going to grow 20%. And thereby you can construct your future looking pro forma or profit and loss income statement projections based upon historicals. What becomes a little more challenging is when you first leave managed care, you're starting your new business and you have no historical reference for where to start from. And there you have to make some assumptions. And here's where your Boomerang optimized consultant can help you. Certain assumptions. Okay, you've got a Medspa practice. What are the services you're going to offering? Botox, filler, Morpheus, hair removal, photo rejuvenation, and body contouring. Let's say those 8 streams. And we can give you historical revenue streams that are realistic. So your optimized consultant from Boomerang can give you your top line goals realistically, low and high pro forma, based upon the cost of goods and services of running a company, based on historical comparables in the industry. What is your HR expense going to be? Probably 40% of your top line projected sales. What is your rent going to be and lease payments? Probably 8 to 10%. Marketing is going to be 15 to 20%. Then you're going to have cost of goods and services of each disposable, non-disposable product. And you can look at your sales, break down your fixed and variable expenses, and then the cost of goods of each of your sales items, and arrive at what is an idealized model pro forma for a startup business. That's what Boomerang Optimized Consultants can help you with, and that is what you're going to look up in the book on how to project your pro forma when you're first leaving managed care. That part of the book was written for you, so review it. We'll help you with it. And then most importantly, once you've got your own numbers quarter over quarter, you'll be able to then grow accurately with real numbers, real-time cost analysis and revenue driver projections, meaning that you can drive your revenue through strategic paid search as you need to get to that top line. And that's when you're in the sweet spot of the Boomerang way.